Hi, I'm Mike Cintolo, Chief Analyst of Cabot Growth Investor and Cabot Top 10 Trader, and I'm here with your Cabot Weekly Review. There's no real way to sugarcoat it. The sort of mini crash we've been seeing here in growth stocks since November, but especially since the start of the year, starting to spread out this week. We're seeing most indexes, stocks get hit. Some, a lot of them breaking down. Some of them still look okay, kind of normal weakness, so to speak, and I'll talk about some of those later. But overall, most indexes, stocks, sectors, at the very least, are under a lot of short-term pressure. Now, if you are looking for a ray of light, I'm recording this 11:11 on Friday morning, on January 21st. I would say this morning was, I don't really predict these lows, but we did see over 1,000 stocks hit new lows on the NASDAQ within the first hour of trading, plus another, I don't know, 350 or something on the New York, which is getting pretty kind of throwing the baby out with the bathwater. Seeing stocks that are down, 25% in 2 weeks, gap down another 4 or 5%, that sort of thing. Doesn't mean they can't go lower, oversold. I'm not a big fan of oversold indicators because you can always get more oversold. Eventually, you look back and say, oh, look, the market was oversold. That's a great buy signal. But you never know when that turning point is. But I would say it's getting pretty emotional, pretty depressing, pretty, like I said, throwing the baby out with the bathwater. So we'll see. My overall thought, though, is, something I learned a long time ago, and I always remember when the market gets volatile like this and, really is declining, the number of dramatic predictions that you'll read about also increases a lot. So you're going to, somebody's saying the market's going to go down 50%, other people saying it's going to be the buy signal of the century, other people saying, this, that, or the other thing. Just let everyone else fight that battle. I mean, it's fine to read about it and think about it, but let everyone else, analyze, Russia and interest rates and the Fed and whatever, the bubbles and this, that, and the other thing. Just pay attention to the evidence. Right now, there's no doubt, the evidence for the vast majority of the market, especially growth stocks, but even the rest of the market is, at best, there's not really any money being made. And of course, at worst, there's a lot of stocks going down the chute. Okay, so I just still think it's time for a defensive stance, a lot of cash. I'm not sure I'd be selling wholesale here if you can help it. But definitely holding a lot of cash, and any new buying or nibbles you want to do is fine, but just keep it real small so that if you lose small. The big money, I always say this, is going to be made in the next big swing, sustained uptrend. There's going to be money made. There's going to be money made back. There's going to be profits on top of that if you're there and ready for it. So that's really the goal going forward. Right now, we would stay safe. Okay, enough of the preamble there. Let's get into the charts. As usual, I'm using a program called MarketSmith. You can learn more at marketsmith.com. It's a product of Investors Business Daily. It's just, I don't want to detail the bloodletting, but, here's the NASDAQ, kind of a little top in here. And of course, we've just really hit the skids so far this year below the 200-day line, which, it's not good. So the intermediate term trend is down. Longer term trend, by the way, the way we measure it, it's a mix of the S&P and the NASDAQ. It's kind of on the edge here. So the next week or two, it's a very slow moving indicator on purpose. So the next week or two, we'll see if that changes and maybe tells us we're in sort of a cyclical bear phase. I mean, I think it's clear that we are, or we have been anyway, for growth stocks, but maybe the rest of the market will catch up. But either way, you can kind of see the damage. And the rest of the stuff is starting to catch up. I mean, this is the S&P 600. That doesn't even include today. I'll look at the Russell 2000, IWM. You can just see just below all sorts of support. The MDY, same sort of thing. Below the 200-day line. A little bit of a turnaround so far today. We'll see if we can build on that. The New York Composite's the strongest index. No surprise. A lot of cyclicals, financials, commodities. Not a lot, but more of them in there. So it's actually been hanging on the 200-day line. And, not, when you look, kind of step back and look at the chart, not bad. But be that as it may, I think, our own intermediate term trend model is negative again. But it's been off again, on again. And the market is so... It just depends on what area you're looking at. So I'm actually more focused on sort of what some growth indexes that I've been talking about. But even so, I would just say, even if you're in some of the stronger, quote unquote, stronger areas, things that have been resilient, even those are getting hit. There's not really any money being made. So there's no reason to be playing things heavily. I'm not saying everything's going down 50% in 2 weeks. But if you're in the best stocks and you're not making money, don't be playing heavily, I think is the main thing. In terms of those growth indexes, I'll be writing about this in Growth Investor next week, but they obviously really hit the skids. This is QQQJ, from 36 and a quarter here down to 29 this morning. I don't know how is that 20%. I don't even know how long that is, but it's a pretty deep correction. Number one, obviously we haven't even had an up day here. So you want to see an up day, and ideally this 25-day line, which is this green line, turns up. You kind of want to see this index hitting a 5-week high sometime down the road. That to us is, long and short of it, is sort of the intermediate term trend model. Right now, obviously, it trends down. Nothing really to say about it. The IPO fund from Renaissance actually has a lot of the stocks that we look at. Same sort of thing, just a steep downtrend. Okay, we'll see. I can't show you. I don't have the chart on MarketSmith for all the new lows and percent, but we're coming into today. It was like 81% of all NASDAQ stocks are below their 200-day line. Now, at prior major lows, it got down to like 10. I mean, so it can get lower. That's what I mean. Oversold can always get more oversold. But there's no question we're on the way there. I mean, it's not like this just started 2 days ago. So, I mean, I think, there's a lot of selling going on. That is going to take some time to repair. But I think let's see if we can get a workable low at some point, and from there kind of start the repair phase. Okay. That's really it. The other thing I would just watch, I had a webinar yesterday. I don't know if you can sign up for it after the fact, but I'm sure we'll be shooting it out to those people who did. Just looking at some cues, and one of the main cues I think is really just the defensive stocks. They kind of provided a nice clue here in early December. We had if you go back to, let me look at the NASDAQ. This was the sort of early December, we got hit pretty hard here, and among individual leading stocks, they got hit really hard. And we did bounce and sort of come back down. You can kind of see how the NASDAQ sort of topped out over this period. But compare that time frame, okay, to this. The XLP, consumer staples, defensive stocks, this is the best defensive measure in my opinion. Utilities are okay, but they're kind of more interest rate sensitive, and healthcare kind of has its own thing going on. Those help too, but I really like the XLP. Anyway, so after the mid-December low, you can see whoosh, just like smoke up a chimney. And it got hit a little bit during that mid-December low, and then boom, another new high. Now it has been kind of off its highs here, but I mean, you can see this is the relative performance line to the S&P 500, obviously outperforming in this environment. Just generally speaking, it's a secondary measure, but I do think, and I'm not predicting this at all. Maybe we just go straight down for another 2 weeks. But say we come in on Monday or something, and the NASDAQ, gaps down or whatever, and we start to rally. If this is also rallying, I'm not saying that doesn't mean the NASDAQ can't work. It can't be a workable low, but it's not ideal. Ideally, I think you'd almost see this thing. I'm not saying it has to go through the floor, but you'd like to see XLP kind of back off and just tell you that, this move right here was telling you institutions were putting a lot of money in the safe stuff. And you could see the same thing in the XLU and the other things I was talking about. So if we kind of finally see the NASDAQ get a low and then maybe the XLPs of the world pull in, I think that can be kind of an early clue that we're starting the repair phase. Again, I'm not saying we're going to bottom and go up to new highs. I don't think I'm all for it, but I doubt it. I think it's going to take some repair work. But I think the XLP is something to clue off of, especially if you get 2, 3, 4 strong up days, like we had kind of at one point here, but you never really saw the XLP come off. If you see this come off, it might be a sign that people are starting to finally re-rotate a little bit out of the defense and into the offense. So we'll see how it plays out. In terms of individual names, I mean, growth stocks are a complete mess. So you're dealing with sort of a little bit of minutia, but sometimes that can be, it's kind of fun to look at. Okay, so here's Zscaler. I just tweeted about this morning, ZS. Now, I'm of the opinion that the next uptrend, most likely, is going to have fresh leaders, okay? And they're going to take some time to set up, but they're going to be fresh leaders because I think a lot of these old winners that were up 1 billion% in the last couple of years have really topped out. And while they can definitely bounce, and I think some of them will eventually, pretty strongly, in terms of being like real leader stocks for the next bull move, the next bull phase, whatever you want to call it, probably not. Zscaler, though, intrigues me a couple things, and I mentioned this before. Number one, first of all, the numbers are outstanding. They are investing this year, which can be a bugaboo. So earnings are supposed to be flat in the current fiscal year, which runs through July. So they're halfway through it. Okay, we'll see how it goes. I mean, maybe they outperform, but either way, then they're going to reaccelerate going forward. But sales growth is great. All the metrics are great, so on and so forth. Okay. Number two is that on the decline, the initial decline, you had 2 huge volume weeks. You had one bad week, and then the next 2 weeks, the stock closed with supporting action on big volume. Then you come in this year, it gets clobbered the first week of the year, but it really hasn't gone down in the last 2 weeks. You can kind of see here, it came unglued the first 3 or 4 days of the year. And since then, I mean, I'm not saying this is heroic, but it's kind of hanging in there. And actually, for growth stocks, maybe it is heroic. It's also holding near the 200-day line. And I just said 20% of stocks on the Nasdaq are, and among growth stocks, it's almost, I would say, it's less than that for sure. So we'll see what happens. Doesn't mean you can't come in and die. It's got a lot of work to do before I would even think about it. But let's see if we can see some more of these sort of things pop up. Zscaler is kind of on back burner watch list. Again, it has work to do. It needs to actually go up as opposed to just try not to go down. But it certainly is. It's a standout, I guess I'd say, especially among the old leaders. Snowflake, just to mention, I think this is going to be a leader at some point. It's still hanging around the 200-day line, which again is kind of yeoman's work among the disaster out there. And it still has this big kind of post-IPO base, which all I can say has been seen in a lot of winning stock. I mean, just a ton of winning stocks come public, go sideways for 9 months to, sometimes 2 or 3 years. And that can be, I think Visa did it, Baidu, LinkedIn. I mean, just a million stocks did it. So it's got work to do like everything else. It's not something that, even if it had a couple of good days that I'd be interested in. But let's just see what happens. Let's see what happens on earnings down the road if we can round out. But Snowflake's something I'm keeping an eye on. And sort of related to Zscaler in the security space, this is Palo Alto Networks, which is interesting as well. It's not as fast growing, but it kind of just had its coming out party. I mean, I guess the original breakout was back here, but it really gapped up strongly in, what was that, September, I think. And it had a nice advance. It wasn't, it's not a set the world on fire sort of stock, but, no complaints. And then finally it broke down earlier this year. But you can see, again, after the first, few bad days, and they were bad days, the stock's been fighting the fight. It's been fighting the good fight here, even as the Nasdaq's getting killed day after day. This thing, I mean, geez, it just had 4 days up in a row recently before today. So that's just something I'm keeping an eye on here. Probably do a little bit more research. Fundamentally, I kind of like ZS better, but I mean, this chart definitely looks more intact. So there's some stuff among growth. And if we do bounce, I mean, you're going to be looking for the tennis balls versus eggs. Which things really bounce? Which things held up somewhat well? If the thing's down 60%, it bounces really strongly, up 10%. Yeah, that's almost half expected in a sense. It's the things that are holding up pretty well and they bounce strongly and they're in pretty good position. Those are the ones you want to hone in on. Outside of growth, there's actually still, I think, a decent, I'm not trying to sugarcoat things because it's a mess, but there's a decent amount of stocks look good. This is Alcoa. Now, breakouts, not so much in this environment. You can see it gets sold into, but it kind of tried to get hit this morning and it's been finding support still well above the 50-day line. You can kind of see on the weekly chart, you wouldn't know that the market's a total mess here. It looks kind of almost kind of a stair-step thing higher, sort of thing. So I like that. Oil stocks are finally getting hit, which it's not overly surprising. Oil prices aren't getting hit. Doesn't mean they won't. But this is Pioneer Natural. A lot of names look good, but if you're looking for an oil name, look for ones that hit new highs. Don't if something's a nice oil stock, but it's still below its old high or just barely got to new highs and came back in, doesn't mean it can't work, but not ideal. This is something that, look at this. I think it was 11 or 12 days in a row, almost all of them on above average volume. Now you're kind of getting a little bit more of a trend knockout move. Obviously, if the market stays weak and the baby thrown out with the bathwater action continues, these can keep going down. But so far, I'm just going with what I see. Whether it's here or a little bit further pullbacks, or maybe these things pull back and you wait for them to kind of resume their uptrends. I don't know. But overall, they look pretty good. Another one in that same ilk. There's others too, but this is Marathon Oil. Now it kind of pulled back almost to its prior highs, which is fine, but not quite as strong as PXD. But either way, you can see, decisively hitting new highs here. A little bit of a lower price stock, moves around more before pulling back. So still look normal to me. The fundamentals and cash flow, you'd like to think that the institutions will support these things when they're cranking out as much cash as they are, but we'll see how it goes. Freeport McMoran, mentioned this before, getting hit here, but this was sort of call it a breakout area if you want to. It's kind of let me show you the weekly chart. If you want to play the sort of cup with handle game, I guess. But either way, to approach its old high. Again, breakouts in a bad market are very low odds situation. I mean, they're good odds almost for shorting, to be honest with you, although that's not my game. But you just notice it a lot. So try to break out, they sell into it, and the stock gets hit. But so far is hanging in there. And at some point, if you're interested in nibbling and taking sort of a risk-reward trade, okay, if it keeps going, I'll take a paper cut. If it goes up, maybe I have the start of a position. That's up to you. FCX still looks fine. Huntsman, some of these chemical things look pretty good. HUN, cheap, pays a dividend, cash flow. One of these stocks. This is kind of built for a tough market. Not that it was doing terribly beforehand, and it's actually come under a lot of accumulation here. It showed up in top 10, believe it or not. And again, everything's kind of getting hit this week, but this pullback, it doesn't look abnormal at all, especially given what's going on. Zim shipping, I think I've mentioned this before. This is Israeli, just FYI. So I think there's some dividend thing, I don't know, tax or something, and this thing pays a huge dividend because the shipping rates are out of this world right now. So I don't know. That's not my game. Contact a financial advisor if you want to, whatever. But the stock's had a big run, ZIM, and you can see it actually broke out last week, and then again pulled back, getting hit, but just to the 25-day line has found support so far today. I mean, who knows how we close today, but so far so good in some of these areas. And last but not least, I'll just mention like Expedia. I still see some stocks. They've come in here like the Hyatts of the world and stuff like that with the market this week. But, again, you kind of look at the big picture here. It's kind of just built this whatever, almost year-long base at this point. And you look at the last few weeks and it's hard to you're kind of like, Mike, what does that look like? It's hard to see them. And that's kind of my point, is that it's not doing much. It's gyrating in here. Don't get me wrong. 15 points in a few days is not nothing. But it's almost a $200 stock, $180 stock. So it's just hanging out near its high. Let's see what happens when the market, eventually we're going to bounce. We're not going straight to zero, I don't think. That would be bad for my career. So when the market does bounce, let's see if some of these things, can kind of show some of this early relative strength. So far, they're holding up pretty well. Another one sort of in that same ilk that is on my watch list, last one, this is the real last one, is Planet Fitness. Again, it kind of tried to, I wouldn't say break out, but approach its old highs. That's sort of a selling opportunity in a bad market. And it got hit in here. But it's just kind of holding the 200-day line. And again, kind of like, similar to Expedia, sort of. Planet Fitness has had this huge consolidation, tried to get going a couple months ago. The market got in the way. And now it's building this structure. Maybe it doesn't work. Maybe the Omicron is too lingering. I mean, who knows? But the business is good in turning around. And overall, the stock at 15% off its high is hardly a disaster. And again, let's see what happens. Can the stock really pick up steam if the market bounces or not? So just kind of keeping an eye on this. Honestly, even if the market takes a little while to really set up to bottom, first of all, and then to set up and get going, I think there's going to be a lot more to glean, separating the wheat from the chaff after we bounce. There'll be some stocks that bounce, some sectors that roll over. Is it rotation? Are the oils, roar back to life? I think there'll be a little bit more, the evidence will be a little bit more revealed. More of the, layers of the onion will be peeled off that we can see what's going on. Right now, it's a little bit harder because just everything's getting killed. But you can see some of these areas and themes showing a little bit of relative strength. Okay, back to the market. Listen, if you wanted to, if you look at anything right now, like I said, you could probably sell almost about everything out there. But let's see how it goes. Maybe today is the start of something. Maybe not. Maybe this is just a 2-hour bounce, and I'm not trying to make too much out of it because we've had these all week, and then we fade at the close. So for all I know, we close down here or something like that. But the bottom line is, like I kind of led with, let everyone else figure out the bottom and this and that. Just kind of see what's going on. Take what comes. Of course, it's easier to do that if you're defensive. I mean, I think that's important. But if you have a lot of cash and you're not living and dying with every opening, what the futures are doing overnight, stuff like that, you can kind of take more of we're all biased, but more of an unbiased look at things and keep a level head. And then as things start to reveal themselves on the upside or downside, you can adjust going forward. Okay, that's all I have for today. Thanks for listening. As always, come by again next week for another Cabot Weekly Review.